Hi, everyone, and welcome to LionRun Consulting's VC series. This is where we pull back the curtain on venture capital and ask investors all the questions that founders wish that they could ask themselves when they're preparing to fundraise. Today, we're here with Adam Eisenberg from Today, we're here with Adam Eisenberg from Ibex Ventures, a leading US and Israeli VC firm focusing on Israeli startups and global mobility startups. We're going to be going behind the scenes to understand what really happens behind VC firms, how deals are evaluated, what due diligence looks like, and what investors look for in founders. If you're a founder getting ready to fundraise or just curious about what investors really think when they read your materials, this conversation will give you an unfiltered look into this process. So anyway, thank you so much, Adam, for being here today. I really appreciate you taking the time.
Thank you for having me.
Amazing. So to start off, maybe if you want to give us a high-level background about yourself and kind of how you then got involved with Ibex.
Sure. Well, thanks. So as a background on myself, I started my career in investment banking at Salomon Brothers back in the kind of late 90s. So don't judge me in terms of my age, but I started investment banking and then moved over to the hedge fund side of the business. And then kind of in the mid 2015, 2016, I joined Ibex. Prior to Ibex, I was actually the CIO of a single family office, and the family office invested into Ibex. So I got to know the firm really well from the outside in, and then joined from the inside out. As you mentioned, Ibex is a firm. We're based in Denver, Colorado. We have about 22 employees. Denver is our headquarters. I'm based in New York City. We have an office in Silicon Valley, and then we have a team of quite a few people in Tel Aviv in Israel. As a firm, we invest across the entire life cycle, but the focus for this conversation really is on the earlier stage. We have two funds that invest in Israel. One we launched in 2020, one we launched in 2024. And then we have soon-to-be two funds. One we launched on the mobility side. The way we define mobility is global, moving people, moving things. We launched that in late 2021, and now we're in the process of raising our second fund.
Amazing. Can you tell us a little bit more kind of about Ibex and what you guys look for across the board and investment focus in general?
Sure. So in terms of what we look for at Ibex, it sounds very simplistic, but we want to try to back phenomenal founders. We tend to not always follow where the tourists are going, in the sense that a lot of people are running into hot sectors, whether it's AI or defense. We tend to like to come into sectors, maybe they're not as hot when we invest into them, but ultimately we like to back founders where we see an opportunity to grow. And ultimately, after our initial check and maybe a follow-on check, then some of the bigger investors will follow suit. And that model has worked for us quite nicely, both in the Israel fund as well as on the mobility side as well.
Awesome. And could you maybe walk us through, from start to finish, if a founder was approaching Ibex, what should they expect from that process?
Well, I mean, maybe I would even go a step further back in terms of part of the question. I think what you're asking is how do we source and then how do we diligence? Mm-hmm. And I think that it works multiple ways. There's the inbound and the outbound. I think from an inbound perspective, of course, founders hear about Ibex as a firm. They send us their pitch books. Some of them are great. Some of them need you guys in order to make them great. But I think that, so there's a lot of inbound, but there's also the outbound, and in terms of whether it's thematic, we might look at certain industries or sectors to focus on. Other times we try to find, in essence, where the puck is going. So it might not be a hot sector today, but it might be something that we deem could become a lot greater over time. And so what we tend to like to do is find these founders. Sometimes it's literally two guys in a garage, no dog yet, in the sense that they're just getting started. It's an idea. We've backed founders that are still literally in business school. We back founders that come from prior large corporations, and we track those. And so a lot of the things that we do is trying to figure out how we can get an edge and insight into what they're trying to accomplish, get to know them early, and then try to get involved with them before sometimes before they have the idea fully baked out. Other times it's we like to lead rounds. We like to get in early, and we like to, if we can, be as large of an investor as we can in a startup.
Amazing. So could you maybe walk us through both options, whether it's like someone were to get a warm introduction and then you kind of, let's say, take a meeting with the founder, or the opposite where it's like a founder has kind of, done their research and thinks that you guys would be a good firm and they fit within kind of like your investment focus, and let's say they go through the normal deal flow pipeline. Maybe could you outline both scenarios?
Sure. And I think it's different by the Israel side and the mobility side. On the Israel side, we're generalists. So we really look at all sectors, all industries. On the mobility side, which we define as moving people, moving things, that's a lot more focused on a theme. It's pretty broad, but we have a pretty broad, wide sandbox that we look at. So on the mobility side, I think when you look at the PM and the team and you look at what they focus on and their expertise, it's a lot more targeted to what they're trying to accomplish within that box. On the Israel side, the box is defined by the region, but we're generalist and we look at all sectors, all industries. So while Israel is very good at cyber or some other industries, there are quite a number of companies that we've backed and that have been quite successful that when we first backed them, people didn't really want to or kind of passed over. And so we rolled our sleeves up. And so when the founders come to us, on the Israel side, it's a little bit of, okay, Israel's a small country, size of New Jersey, but ultimately it's not about backing them in Israel, it's about them becoming a lot broader and more global. So for us as a firm, we get behind them, we try to understand what their vision is. What are they trying to accomplish? How broad are they looking to go into that ocean? And then as a firm within Ibex, given that we have a strong team on the ground in Tel Aviv, we have a very strong team in the US as well as our investor base and our LPs, and we try to connect those dots. So from a firm, we're trying to help them in the early infancy stage all the way through as they continue to grow and mature, because we have those tentacles to help them grow beyond just Israel. On the mobility side, the opportunity is looking at their defined industry and what they're trying to accomplish and figuring out how we can help them early on as they continue to mature. But then ultimately, when the bigger investors, deeper pockets come in, we've been in there early. A lot of times we might even step off the board in some instances because our value add is not helping them with their things that ultimately don't necessarily help move the needle. For us, it's more about helping them early on and helping them grow. So we really try to be a very hands-on board member if we can in situations.
Yeah, no, that's really amazing. So I'm curious. So a lot, kind of what we do at LionRun and what we're really focusing on is like helping the founder. Fundraising is essentially can be a full-time job for a lot of founders, and it distracts from the business. So a lot of the work that we're doing is kind of taking that burden off of them and then kind of guiding them like, hey, these are all the materials. This is everything that you kind of need to build up the data room from like A to Z. And so a lot of the questions that we get are around like what they should expect, what do they need, what are common things that funds like Ibex would be asking them for once they're kind of in that due diligence process. Let's say like, I'm sure there's times where you're meeting with founders and you're almost like building that relationship over a long term, because from that early stage as they grow, and then you're trying to like come in at the right time. But I guess like, let's say it's a early stage company, they maybe raise a small angel round from family and friends, and like this is their first, institutional or VC raise. What would you say is kind of like the expectations around that, and then how does that evolve as the company then grows?
It's a great question, because I think a lot of founders they fully, first of all, they underappreciate what needs to be done. They underestimate the time that it takes in order to raise capital. And you have to knock on a lot of doors, kiss a lot of frogs. And I think that, first and foremost, it might sound obvious, but it's the message. Could you articulate what you're trying to accomplish in a very simplistic way, like you're talking to your 80-year-old grandmother, and then putting it to paper? So a lot of times you might get a deck from someone, might be a great story, but it's not concise. It's not clear. You've no idea what's going on. They go on and on. A lot of these founders are brilliant, but they can't articulate that message. So what we want to see, as you can imagine, we get hundreds and hundreds of pitch decks a year. Some are great, some are not. Some you can assess fairly quickly, and we want to understand. So understanding that message, and then it's the process of really trying to dig in. Now, when you're a startup company and you don't have financials because you're just getting your idea together, it's being able to articulate what's the message, what's the addressable market, what are you trying to accomplish? And putting that in a very concise way, that helps us at least weed out that process. Because for us, whether it's either the mobility side or the Israel side, we see 600-700 companies a year. We're investing in maybe 2 or 3. So you can imagine that, and there are a lot of other VCs out there as well that have a similar process in a funnel. Yeah. And so it's very easy for VCs to say no. We try to look at them. We try to add value sometimes, even just to tell a founder, look, it's not for us, here's why. And that might be valuable for them. But in terms of our process as we go through the diligence process, we can move in as quickly as a few weeks and sometimes a few months, depending on the opportunity, depending on the competitive nature of the opportunity. We tend to be diligent because ultimately when we make an investment, you're basically joined to the hip for a long time. For sure. And we want to see that opportunity evolve. We want to be value add board members. We want to help them grow. And so a lot of times it's about syncing up with the vision, trying to get into their head. Ultimately, they know how to put the business together, but sometimes they're lacking in the ability to structure the organization and put together the materials that ultimately will be required for them in order to be successful.
Yeah, wow. So I have a lot of follow-up questions on that.
Sure.
The first question is around okay, let's say and this is what we try to explain also a lot to the founders that we're working with, and I think sometimes it doesn't necessarily click. Let's say you have someone introduces a founder to you, and then you go meet them. Let's say you meet them for coffee or you have a quick call with them. What happens next?
Well, yeah, as you can imagine, when you're in the VC space, everyone has an idea, and everyone says, "Oh, my friend, my cousin, my brother," and they show you the ideas. We try to screen. I don't want to waste your time. We have a finite amount of time. Time is the most valuable resource we have. So we do an initial assessment, and that's why the deck is important, or at least the message is important, because what we see is we make an initial determination.
So after that meeting, would they then send you what you would request?
So typically what happens is send us something. A teaser, it could be a couple of pages, it could be a deck, it could be something, just that we can just take a quick look. Now for us, it's a little bit of pattern recognition. Sometimes we see an opportunity, sometimes we know the addressable market. And so we can say, oh yeah, that's not gonna work, or that might work, or that's really interesting. And so we'll assess it. If it's interesting, then we'll have a follow-up and we'll have that coffee or that meeting. And then through that meeting or that coffee, it's starting to dig a little bit more, understand their background, understand their vision, understand what they're trying to accomplish, where the pain points are, understand maybe it's usually a founder and a co-founder. And then ultimately, then you start to dig further and further in, you do your background checking, you understand the markets, you look at the competitors. And so for us, we're very diligent. Fortunately, we have a very strong, both internal and external ability to assess the situations fairly quickly. We have advisors that are linked up with Ibex. So for us, it's the ability to figure out and get as much information as we can. Again, as a founder or as a startup company, there's not a lot of information. So what you're trying to get to is really what are they trying to accomplish, and are these founders well equipped to get to that point? So
then after, let's say you were to have that meeting, at what point do you ask for a data room, if you even do?
So it's usually, I'd say after maybe the first or second kind of conversation, we will start digging in.
Do you have a team of analysts, associates?
So we do. So on both, as I mentioned before, we have the two sides. On the mobility side and the Israel side, we have a portfolio manager, and we have people who work under them as a team. So yes, it's definitely a lot of digging in, going through the data room, trying to assess the information. Data rooms are helpful, and then we do a lot of our own work. It's like asking for a reference, but then you call the other 3 people that are not on there. It's the ability to really assess the situation as diligent as we can.
When it comes to then preparing that data room, let's say for the analyst or associate team to really dive in, what could a founder do to essentially give the analysts or the associates, let's say on your team, the information that they need to like potentially champion the deal internally? Because I assume you guys have some sort of checks and balances of investment committees that it has to like go through that process.
Sure. So I think first and foremost, the biggest lesson I would tell any founder is when you get the information or you're giving the information, it's the same, reverse the shoe. So if you were on the other side, what would you want to know? And think about it that way, not what you want to give out to the, because obviously a lot of the founders have information and they just spew it out. Mm-hmm. Think about it for a second and reverse it and understand if you're giving the information to a VC, will that give them the information that will make them smarter, more knowledgeable about what you're trying to accomplish? From our perspective, as we go through the whole process, ultimately our last step on an internal basis, we usually we'll do a write-up. We'll have the founder or the team present to us as an entire firm, kind of our investment committee. Mm-hmm. And then with that process, we have an internal write-up that we write. We have a memo that analyzes the entire opportunity. So that can be presented internally, and then we have a yes or a no decision based on our team internally. But to your question about all those steps along the way, it's not always an exact roadmap, but there are steps that go through it. So there's the initial meeting, then there's maybe there's a follow-up meeting, then there's a data room, and then references, and then we're using a lot of our internal diligence and industry expertise in order to assess the situation and try to get a lot deeper than what maybe is provided through the founder.
So another aspect that I want to kind of like dive into, because a lot of the founders that we're working with are typically on the earlier stage, and they always question like, well, why do I need this? Why do I need that? Why do I need financials? Because it's all assumptions anyway. Why do I need to include a business plan? Because it's probably going to change anyway. Like all these questions is kind of like asking why. So I'm just curious to get your take on like really the purpose of all of that and why it's even needed, and how does it potentially help the founders increase their likelihood that they could, get investment?
Sure. No, it's a great question. And I think a lot of founders will probably question exactly that. Why should I do this? It's a waste of my time. Firstly, it grounds them and it directs us firstly, because for them, they can put their thoughts to paper. They can actually think about what they're trying to accomplish. For us, it at least gives them a roadmap and us to follow where they want to go. Now, granted, you're right. They will pivot around multiple times, and some of the best companies have pivoted over the years. Financials, correct, it doesn't really matter today, but it gives you a projection of what they're trying to aspire to be. I'd say most founders, their projections will be off. Mostly, they're going to tell you it's going to do X and it's going to be well below that, but that's okay. Once in a while, we have a couple of those founders that actually are so often it's way higher than that. That's far and few in between, but at least it directs you as a roadmap in order to figure out where they want to go, and it allows us to follow that, so we can have the conversation and ultimately help them. So I wouldn't say it's for naught. It actually is very, very helpful. Mm-hmm.
Another question we get a lot is around the chicken and the egg dilemma, which I'm sure you've heard. Is we'll hear a lot of times from founders. They'll say, "Well, investors want to see traction, they want to see validation, X, Y, and Z. They want to see a finished product in some capacity. But in order to do that, then I need capital, but they aren't going to give me the capital unless we have that. So what do I do?"
It's a good question, but it also depends. You want to try to align yourself with the right backer, the right VC. From our perspective at Ibex, we try to likely be the first check-in on situations, or at least the first institutional check. So as I mentioned before, we've invested in 2 guys in a garage, no dog, and just the idea. That's early. But also try to align yourself. Like from an Ibex perspective, we'll go from kind of call it seed to even A, and then we'll potentially follow on. There are other funds out there that are more growth, and they want to see more of a defined product or a defined business plan or revenue. So really, it's about finding the right partner that you can actually find and align with for the right capital.
Yeah, so you're pretty much saying like, if they're at that stage where let's say they don't have that type, or if they're getting feedback from several funds, oh, you guys don't have enough traction, or your product isn't developed enough, it's like, well, there could be potential investment partners that could actually be interested and are willing
Sure.
to, because that's they're willing to be there from the really beginning.
Right. And I think, look, the number one answer is yes. The second best answer is no. And nobody likes a maybe. So what you want to try to get to when in anything in life is a yes or a no. The maybes just waste everyone's time. So as a founder coming into a VC and they're asking for an investment, try to get me to a yes or a no, because the maybes are the ones that waste everyone's time. And with their information and the more they actually spend the time to put their work together, to put their business plan together, to put their deck together, to give us the information in the data room, all of that is going to help hopefully get us to a yes. But again, as I mentioned before, we see hundreds of companies a year. We're only investing in a few. So what we try to do, as I said, is we try to look at them and maybe give some feedback. And the feedback, maybe it's not for us, but the industry is small. And so if you do a really good job at presenting that idea, I might say, well, it's not for us, but I know a friend who would be looking at this. And that's how, if it's a good idea and it's not for us, we can pass it along to someone else.
For sure. I'm also curious to hear your take. Like, do you see from the founders, that approach Ibex, like, is there ever like a repetition of like mistakes that you've seen, or like a pattern of mistakes that you've seen when they're like either pitching or when they're in the meeting, when they're explaining their business, that like you wish that you could kind of stop them and be like, get them on the right path so then they could then.
I think I would say the biggest kind of issue that we find is not being able to articulate the story. That's really it, because a lot of these founders are brilliant people and they have great vision and great ideas. And obviously every founder thinks their idea is going to be the most successful one. Great, but articulate it to me, to us. And sometimes, as I mentioned before, on the Ibex side, we have a generalist side on the Israel side, and we have a specialist side on the mobility side. And so you have to be able to articulate your story well enough so that we can actually make that investment. If you can't, a lot of times those best ideas get passed along. And if you make that mistake over and over again to a lot of VCs, you're not going to get funded properly.
I'm curious your thoughts around if there is a company that you initially said no to, is there a potential that down the line that no could potentially turn into a yes?
Absolutely. And I'd say there are several companies that in the past that we've done where we've invested and we've said no for a confluence of reasons. To the founders' credit, they followed up with us. And so we said, I'd say don't take no for an answer lightly, right? Because you as a founder, you're selling something and you're trying to get the VC to ultimately close on the investment. To this credit of this fund, to the credit of this founder, they came to us and they said, here's a great idea. We like it. We did our diligence. We couldn't figure out if this is going to work or not. They came back to us 6 months later. Here's the data that shows how we make progress. Maybe, okay, we passed again. They came back to us another 6 months later and said, look, we made a lot of progress. And by the way, here's where you, Ibex, missed it. We ultimately made the investment, and that investment, 12 months later is doing phenomenally well. So I wouldn't say it was a mistake, but the point I would make with that founder is they were relentless. They had a great idea. They kept on coming back to us with additional information, and that really resonated. And we might have missed something initially, but ultimately we invested, and we'll see how that goes. Maybe at a future podcast I can mention that. But until now, it's in the earlier stages, but it's doing well.
For sure. So you're saying like investor updates are key, because that could turn into
and don't be annoying. Like don't just follow up with hey, what's going on? Let me give you follow up with some
like substance.
Listen to the conversation. If there's something that the VC is asking about and it's pertaining to your business and there's an update and it's material, send that update. Give us the update. Tell us what's going on. Tell us about the conversation. Reference that conversation and then point to that update of information, because that's going to help. Maybe we pass on that round, but maybe the following round, maybe we can actually lead that. Sometimes it's too early that we just can't see that vision that the founder can see, but ultimately it might be an amazing idea and we can come in at a later round.
Yeah, I love it. Okay, cool. I know I'm not really, I'm trying to think if there's anything else that we want to touch on. So this will be cropped out, but.
Can I give a shout out to Moshe Bellows?
I couldn't agree with anything more.
You couldn't agree?
I agree fully.
Moshe Bellows is my mentor and my rabbi. You can keep that on now. We'll do the bloopers.
I'm trying to think. If there's anything else? We kind of touched on a lot of these questions.
Anything you want me to hit on for you guys?
Like I think like naturally it kind of like becomes self-evident.
So we're talking about the deck and the information and data room.
Yeah, the biggest thing for us is like especially now, especially with like AI and everything, founders are like questioning like why they need things, and they're like, well, another thing is like they're like, well, why can't I just show a demo? And what I often stress is like, well, most of the times you're not in the room to show a demo.
Right.
Let's say you have a meeting, you sit for coffee with the founder. Usually then you're going to pass that deal on to the investment committee or to your associates or to your analysts.
Right.
And they're going to do the due diligence. They're going to do a deep dive. And so you're not necessarily going to be in the room. Maybe later on, then they're going to ask for a demo because they'll want to see or validate it, across like their assumptions and what they like the information that they've received about the product. But I think there's that aspect. And then also sometimes a lot of the founders that like we work with, there's a bit of, I hate to say it, but a little bit of an arrogance around it. Like they're like, but if my company is that good, then they'll like, why shouldn't I have the leverage?
But it doesn't work like that. It works. It's both ways. That's why, to your point earlier of like, sourcing deals, they're inbound and there's outbound.
Mm-hmm.
And so you have to hustle. You have to run around the same way the founders have to think about that as well. It's also, from the perspective of, to your point of, we might not get to that demo point. And so it's like a resume. You get one shot at making a first impression. And so when you look at that deck or you look at that information or that teaser, you have to be able to articulate very clearly what you're trying to accomplish, what your mission is, and why we should work together. And that ultimately is that first step. And then all the other things that follow through are very important. Mm-hmm. But you want to hook that person or that you want to hook the founder and the VC, at that first shot.
Yeah, one of my favorite lines that I heard from another friend of mine in VC, an investor friend, he said, like, you have to almost build an undeniable stack of evidence of why your company is what you say it is, why you're the right person to be building this, and why they should ultimately invest in you and take the chance on investing in you.
Right. Right. And I think the last point I'd make on this is that a lot of it has to do with the founders, because the ideas are the ideas and they're great, but ultimately you're betting on the jockey, not on the horse, right? And so the jockey is the founder who's ultimately building that opportunity. Pivoting is not a bad thing. It's just that ability to realize what's working, what's not, and then move around. So what do we have in that first initial meetings? It's just that person, their track record. And look, Ibex will back successful and failure, but understanding why they failed and what happened. It's not just about first-time founder, because that's a whole nother conversation. We could talk about first time versus second time, but ultimately it's you're investing in the people and their ability to figure out and navigate what they're trying to accomplish, their idea. And so it's hard because it's not like you're dealing with a mature company. You're dealing really, really early on. So a lot of the information that we talked about is getting those pieces of information. Maybe they're timely, it's tedious, and maybe it's just you think it's a waste, but founders should definitely do that.
How do the expectations change for an earlier stage versus a later stage raise?
Well, first and foremost is in the earlier stage, you don't have numbers, as we talked about. Later stage, you can have data, you can have customers. So you potentially, as you move down that time horizon, later stage, you have customers you can call for references to understand, why did you pick this startup? Why did you go with these founders? Earlier on, you don't have that luxury, and so I think it's a different time horizon. It's a different risk reward, potentially also a different outcome. If you invest on the seed round, you have the ability to make a lot of money, but potentially strike out more, and that's the art and the science. On the later stage, that's a whole nother animal with growth equity, and they look at things on a different perspective. Their return profile is different, but they have more data in order to back up to validate the idea.
Is there anything that's like a big no that when you see it, let's say in a deck or in an email, that like when you see that it just totally turns you off and on the?
I wouldn't say no. I mean, there are definitely things that raise the eyebrows, like husband and wife. That's a little bit of an eye, I mean, and there have been some successful ones, but I think it's, you work,
Yeah.
You want to separate the, church and state. For us, it's, I don't know if is a resounding no. I think there are a lot of things, pattern recognition that we look at. We see certain things, various industries, various types of companies, various types of outcomes that they're trying to accomplish. Sometimes we've seen that movie too many times and it doesn't always end well. So we like to say we make a lot of mistakes once. So for us, it's about the pattern recognition. And when you're in venture and you see enough deal flow and you see enough opportunities, I think that you can start to pick up on those, and which allows you to kind of see a lot of deal flow because you can dismiss quite a bit fairly quickly.
For sure. Amazing. So before we wrap up here, do you have like a last piece of advice that, let's say a founder wants to get in touch with Ibex and they're preparing for that raise before they contact you guys, what piece of advice could you potentially give to them?
I'd say prepare as much as you can. Try to put the information concisely together and then be relentless. Don't give up. Follow your dream, but also don't give up. If a VC says no, push them, without being too pushy, but follow up with information. If they say no, try to understand why did they say no. You can learn from that no, because maybe the next VC might be interested, or like in some instances, you go back to that VC after some time with more data, and then sometimes it could turn into a yes.
Amazing. Love it. Well, thank you, Adam, for
Nina.
joining me today. Really
Great
appreciate it. And for any of the founders out there listening, if you want to get in touch with Ibex, you can reach out to Adam, or if there's another way, that would be the best way to get in contact with you.
You can either LinkedIn or email, or I'm sure we're findable.
For sure. Awesome. Thank you, Adam.
Thanks, Nina.